All right, Mark here once again, and today we took a trade on the NAS, and I wasn't able to trade live today, but I'd still like to give you a trade recap on the trade that we took and how we did. So I'll start off, and we'll be just using replay on TradingView since we weren't able to stream live today. So as every morning, what we do is we wait for this 8 a.m. candle to close, and we mark out our 8 a.m. highs and the 8 a.m. lows. So after we mark out our 8 a.m. highs and 8 a.m. lows, what we then do is wait for the open and see what price wants to do. Will price sweep the 8 a.m. highs along with a key level such as London high or a higher time frame PD array such as this daily fair value gap? And after sweeping these key levels or tapping into this higher time frame PD array on the lower time frame, give us some sort of indication that price wants to continue lower, and we target the 8 a.m. lows. On the other hand, if price at the open goes bearish and sweeps these 8 a.m. lows along with a key level such as this area of liquidity or these Asia lows or this higher time frame PD array, this 4-hour fair value gap, sweep these lows and these key levels, then on the lower time frame gives us some sort of bullish indication that price wants to head higher, aiming for these 8 a.m. highs. So that's the model that I use each and every morning. That's the model that we use today, and that's what was our trade. So today, the Nasdaq at the open made its move. So here on the 1 minute, we have our key levels marked out. We have our 8 a.m. highs, our 8 a.m. lows. This is the New York Open, midnight open. That's a key level for me as well. This is the Asia lows, and this is our new day opening gap and our 4-hour fair value gap. This is our London high and our daily fair value gap, which is our higher time frame PD array. So here we are at the open, and I have these marked out because I kind of want to see. I don't want to try to pause and stop and get things right. I kind of knew where we took our trade, so I'll let it play out. So I'll let it play out here, and here we are waiting for the open, waiting. As we're waiting, we're seeing that price is creating these higher lows and higher highs going to the high. But I'm still waiting for the open for that volume to indicate which way it's going to go. So just about a few minutes before the open here, and price is still going, and we swept these 8 a.m. highs. Here it's going for our key level, our London high, and I'll pause it here. So here is where I started to mark out some areas where I wanted to see price inverse to show me that it wanted to go lower. So here is a 1 minute fair value gap that was created on the way up that I marked out. It has already swept 8 a.m. highs, already swept our key level London highs, and it rejected from our higher time frame PD array this daily fair value gap. So those were all indications that price has swept areas of liquidity that it needed to at the open to manipulate higher. Now, if and when price inverts this 1 minute fair value gap, I'd be interested in taking a trade. My motto is to inverse the fair value gap and then look for a retest of that inversion fair value gap for an entry. Now, this morning was a little different because on the way down, it went down with increased volume and speed, creating large bearish candles, which then created a fair value gap on the way down. And I'll show you exactly what I mean and how I had to adjust to get an entry on this Nasdaq play. So here we go, play down. Okay, so now, and I'll back it up here just a second. There we go. There. All right, back it up here. Boom. So, as you can see, I paused it here because this is the exact candle that inverted this 1 minute fair value gap. And that created the inversion. Now, typically, as I said, my model is to wait for a retest of this inversion for an entry, simply because a lot of times when this candle inverts these fair value gaps, it may still have some ticks on the clock before it closes, and as you can see, it closed way down here. So when it does that, instead of a sell order, a sell stop, which I did put a sell stop there, and I'll put a limit order. Well, I put a sell limit order there. I put my sell limit order here for the retest of the inversion fair value gap. Now, as I seen this wick on this bottom candle, when it inverted, when this 1 minute candle inverted and closed here, it immediately showed me a wick here, which was, in my opinion, in my thinking, the next candle would continue up and retest this inversion fair value gap. However, in my experience, when the NASDAQ moves with such force in a direction, it usually will continue in that direction and not give us much of a drawback. So I didn't want to be one of those traders that sit here and so rigid in my strategy that I can't adapt to price. So with this volatile market, with these news candles, so on and so forth, I've learned to adapt to the market. So I put my sell stop, my sell limit here to follow my strategy for the retest. However, I also put a sell stop right at the tip of this candle here. Let me get rid of that. Just in case price decided that it didn't want to go all the way up and retest and come down and continue and do a continuation down and hit our targets. So that was my setup. I had my sell limit here just for the retest of the inversion, and also had my sell stop here just in case price decided it wanted to continue down. Either way, I wanted my entry. This is a little bit better entry. However, this is still an entry. We still are aiming at these 8 a.m. lows, which is still a good RR with about, that's 150 point move right there. And that is a 2.5 RR. And I'll show you how that played out in just a sec. So let's play. Boom. There we go. Let's stop it there. So what happened here? Price, after it inverted this fair value gap, it retraced just a little bit, opened this next candle, retraced just a little bit, then came back down. And that's when it tagged us in. On the way back down, it created this fair value gap here, this bearish fair value gap. So let's get rid of this. And this is where I place my stop loss. And then, of course, my TP was at these 8 a.m. lows. So that was the move that we got in. So even though we didn't get the retest of this inversion fair value gap, we still got our entry, and we still got a pretty good position with our stop loss and take profit with a 2.5 RR. And now we're in the trade. Once it came back, and with these sell stops, let me say this. I like sell stops for one other good reason. Usually when you place your sell stop at the end of a wick, so this candle came down and it retraced up before it closed, ended up closing here. So when this candle came down, stopped here, came back up and closed here, so that tells me that if it comes back down to this area, it'll most likely continue down. So when it does that, it leaves very little room for a drawdown, and that's exactly what happened here. When this second candle opened, it retraced up just a little bit, came back down, tagged us in, closed here, second candle open, retraced, didn't even get back to our entry, and then continued down. No drawdown, no drawdown at all. And it created this fair value gap, which simply was created because the NASDAQ was moving with such force to the downside, which caused me to put my sell stop there in the first place. So that's just being that's just being fluid in the market. You have to be fluid in this market. I've watched some guys trade, and guys I look up at good traders, but what they'll do is they'll watch an entire move for an entire session, go up, waiting for manipulation. They manipulate. They don't know, is this the manipulation? No, it's the distribution. It's not reversing. So they're watching this whole move go up, and then the PM session comes. They say, "Oh, we didn't get a trade today." You watch the trade go in, or they'll watch the trade go up, and then they'll watch the trade come down and never retest their area to get an entry. So they watch the whole move up. It hit all their areas of liquidity, tap their PD arrays, price comes down, and it creates their entry model. However, it doesn't hit that last tick on the entry model, that retest, because it's moving with such force. And because it doesn't hit that retest, they never get an entry because they're not fluid in the market. They're unable to adapt. They'll use market entries or sell limits, and they rarely use those sell stops because they don't know where to place their stop loss, and so on and so forth. But typically when you're using a sell stop and the market is moving with such force and volume to either the upside or downside, there's very little chance that you'll get a lot of drawdown. So you either place a fixed stop loss, being whatever is comfortable with your risk tolerance, and you get that entry and you keep moving forward and you catch the move. So that's what we did. Fortunately, we created a fair value gap, which placed my stop loss there. If this fair value gap wasn't created, I would have still been able to do a fixed stop loss of usually about 50 points. That's usually what I do in this market. You have to give it about 50, 60 points in this market. So, boom. So we'll just let it play out here, see what it does. Tagged us in, came back down. And these are big candles, and tagged us for the full TP. So that was the trade for today, and it was a good trade. And like I said, it was quick. So when we hit TP at around 9:45, 9:44, so the market wasn't even over 15 minutes. We got our entry, got our full TP at 2.5 RR for about $3,000. So that was our trade for the day. And that's the one thing I learned, guys. We got to be fluid in this market. You have to be able to adapt. If you're not able to adapt and you're so static in this market, you'll miss a lot of moves. You'll miss a lot of entries. You'll do a lot of no trade days, which is okay. It's okay not to trade, but you have to follow your model. As you can see here, I followed my model. I hit my key levels. I swept the highs, these 8 AM highs. I hit my key areas of my key levels, and it also hit a higher time frame PD array, which it reversed, and I marked out my fair value gap. It inversed my fair value gap. Now where the fluidity comes in this market, it's moving with such force, there was no retest of that of that inversion. So instead of a sell limit or a market order, I placed a stop order here at the end of this wick, telling me that if price retraces and then comes back down to this area where it retraced from, more than likely it'll continue downward, which it did, creating these big black bearish candles to the downside, leaving us absolutely no drawdown and full TP. So that's our take for today. That's our trade for today. Thanks everyone for checking me out. Hopefully we'll be able to stream live on Monday, and I will see you guys then. Have a great weekend and safe trading. Peace.